Welcome to this week's video where I discuss what I believe is important for individual investors to consider while they make their investment decisions over the next 5 to 10 business days. We're going to talk again about the Russia-Ukraine situation, what's going on in that part of the world, and how that continues to affect individual investors' decisions. We'll also speak about the Fed and the Bank of Canada. What are they saying most recently? How fast and how high can interest rates go? And lastly, to be a contrarian. I believe being a contrarian at these times is a great strategy for individual investors to have to make the most out of what's happening in the world today. The situation in Ukraine continues to evolve as the war carries on. I know there are a lot of people that think that this could drag on for weeks to come. I'm actually hopeful that we will see some sort of resolution in the coming maybe few days. I know that there are some discussions going on over the next week in Turkey. Both sides will meet at the table once again, and I think there is some hope that they could come to some sort of ceasefire and agreement. If that were to happen, or we should get a whiff of some sort of agreement, I think you could see these markets move significantly higher. As an individual investor, I think we need to keep our eyes and ears peeled to what's going on in that part of the world, because I think it would have a major effect on what happens in the stock market. So going forward, take a look at your portfolio, understand what's going on with respect to the war in Ukraine, and how it can actually affect what you're buying over the next few weeks. Recently, we've heard both from the Federal Reserve and Bank of Canada indicating that interest rates may need to move higher sooner. There is talk that they could raise interest rates, both Bank of Canada and Federal Reserve, as much as 50 basis points in upcoming meetings. In my opinion, I think the market has already digested these types of moves. I think until interest rates get significantly higher than they are today, both stock market and the interest rates themselves can both move higher at the same time. There's been a lot of talk about sectors such as technology, that tech names cannot move higher in a higher interest rate moving environment. I believe that is not true. And we've seen recently a lot of the big tech names move higher, even as interest rates continue to move higher as well. So going forward, don't be surprised to see these tech names move higher. I think individual investors need to take a look at this sector once again, because these are the names, in my opinion, that have the most room to run, as they've been beaten up, unfortunately, the most over the past 6 months. To be a contrarian, in my opinion, is something I think individual investors need to consider. The famous Warren Buffett always said, be fearful when those are greedy, and greedy when those are fearful. And I think that is a great saying to have at this point in time. There are many people around the world that are fearful at this time, whether it's due to COVID, whether it's due to the war in Ukraine, and individual investors need to try to capitalize with respect to the stock market at this time. We've seen a number of sell-offs, 1 or 2 week sell-offs. We've seen a couple of months of sell-offs over the past 6 months. And I think those have been the best times for savvy investors to take advantage of individual stocks to put into their portfolio at 20, 30% discount. So going forward, continue to look for these discounts in the stock market. Look at individual names that still have their story intact. How is their future earnings? What does their bottom line look like? How is their cash flow? What are they doing? What type of business are they in? Are they truly affected by what's going on the other side of the world right now? In my opinion, these are the names that you can take a look at, because there are so many of these names that are just being sold off because they've been doing a really good job over the past few years, rather than really delving into their businesses themselves. So when individual names come down 25 or 30%, that they've been going so well for so long, a lot of investors are saying, well, these stocks need to fall, and they have recently. I think those are the names to take a look at. Be a contrarian. Buy when those are fearful. Buy when those are selling. That is the best time to get into some of these good quality names.